Good morning, everyone. It is Wednesday, January 13th, and this is Nadex Morning Analysis, where we look at hotspots in the markets where you might want to look for potential opportunities today. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice. Before Brian and I jump into it, I need to share that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And lastly, this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. We're going to jump right into it today. I think we're going to start off just because it's been the story with some volatility in an interesting market. I'd like us to, and it does that automatically, is let's talk about gold to begin with before we talk about opportunities elsewhere.
Yeah, so obviously going to story bouncing back and forth in kind of a sideways channel. I mentioned yesterday that CPI was going to be a really important read. It's a month-over-month reading, so it is pretty in touch with what we're dealing with in the markets right now. It actually came in pretty much right on target as far as what forecast is. And that's not necessarily a bad thing. We always like the surprise because that tends to lead to a lot of different movement, just because, again, the market has to readjust to what was going to happen versus what actually happened. But as you guys can see over here, you guys can see the two flashing back and forth. And, Todd just informed me, I apologize, guys, that my cursor is not always where I think it is. For some reason, when we go across, it's off. So, right now it's at the bottom. It's showing that it's at the top. So I do apologize. But you guys can see the two things blinking back and forth. That's where the cursor is. But actually starting to see some CPI in there coming in at 0.4 versus what it was previously at 0.2. Is actually showing a little bit of increase in prices, i.e. inflation. One of the things we mentioned, if this number was really off, that we weren't seeing the inflation, we would expect gold to still have a kind of a troubled time going higher. In preparation for tomorrow, remember tomorrow is the day that Pence is set to release his multi-trillion-dollar stimulus package. As I coined it before anybody else takes it, tomorrow is the main course. He said that it was a down payment in December. I'm changing it to that was an appetizer, that tomorrow is the main course and then be dessert later on. But that's coming. We're going to get the details of that tomorrow. So, and I do think with that much money, the amount, the price tag that he's putting on there, the type of relief that it is, I do think that is definitely going to be a catalyst for gold to go higher. So again, that's on kind of a piece over here. I'll show you my chart real quick. This is, you guys have seen this before about this 1860 level, the 1830 level at the bottom. For the most part, and again, I'm going to switch over in a second, but you guys can see we've pretty much been just channeling sideways, right? Bouncing off tops and bottoms, and again, we found some support at the bottom. This big downfall also ran into a zone, so it's not necessarily a bad place to kind of put our roots in and go higher. Wanted to bring up daily effects here, and actually, let me make it a little bit bigger. There we go. Couple of things to talk about in here. So I've marked off the zone that we had talked about before, right around that 1860 level. Now, as you guys have heard me talk before, as a supply and demand trader, not a support and resistance trader, I know that zones, they tend to work until there's no buyers and stuff, and then they typically break through. And my golden rule that I teach my students is typically hit number 3, but typically, if it's not hit number 3, it's most likely hit number 4. That is really what drives through a zone. And a lot of times we use that same zone. You guys have all heard the adage, old buyers become new sellers and vice versa. But right now you can see where we had that level of stabilization. We've had a couple little pokes, right? A little front run here, a base, drive back down, which was a decent one. Now we kind of hit it, and the reaction is not as strong as what it was last time. Right. And in reality, this is hit number 3 coming up. So we're kind of at a place now where you can say, hey, listen, is this where it's going to finally fail? And then be really kind of the buying level to drive this higher. And interesting enough, again, we have those targets on the other one, but you can see that 1890 we have targets, 1910 we have targets, and it's not just me that believe with this. Right now, the IG client sentiment is 83% long. Okay, now typically when it gets into the 83 range, I get pretty nervous that it's just overly in one direction. If everybody in the world wants to go long, there's no one to sell it to you, so it's impossible for it to go. It's impossible for it to go anywhere because there's just nothing will happen, right? Everybody will be trying to buy it, but nobody will be willing to sell it, right? The other thing that I want to point out too is that actually Nadex this morning had an article on it that talks about that gold is awaiting the breakout as support hold now. So everything out there is talking about it going higher, and it does really make sense with where we are on a fundamental basis. Again, this could be an absolutely huge stimulus package tomorrow. anytime money is printed, the first thing people do is run over it and try to use gold as a hedge for inflation, which again, we know that it's not, but it's what people believe, so a lot of times perception is a reality. So, just a level to watch out for. We've talked about it for the last few days as being great shorts. And again, we've had a number of different short trades in here, but at this point, I think we need to be changing the sentiment and say, hey, listen, now it's time to wait for that break. And remember, the first time it pokes its head through, everybody's going to be like, I knew it, it's going long. And then what do we expect? We expect a pullback. So again, that kind of confirmation entry may be good, but it's definitely something that I think would not be a horrible trade if it matches your risk profile to be long before Biden announces the details, because I do think that is going to be something that sends this much, much higher.
All right, I'm going to jump over to the Nadex platform and take a quick peek. And as we can see, right, we've had this, we've been talking about this 1830 level of support, and it's definitely found that support in this channel, and this 1860 level as resistance. And I mean, we actually kind of hit it once back here. This is the second time. This is the third time. This could be the fourth time. It's really kind of, I guess you got to look at your chart, but right around 1860, this time it might come in touch in here, and this is when it might blow through it. So one way to do that, I mean, you've got your binary options. I'm really expanding this out. 1860 is, this, would have to bring this down some. Looks like it was a little too thick, but there we go. There's that 1860-ish level, and you'll see that there are plenty, and this is today. If we wanted to look, we could probably even take a look at the weekly binary options would be another way to do that. Here, I'm just going to pop those up, and you'll see that there are some different levels in here. Again, that's defined risk, defined reward, so you are hedging yourself a bit in case the market moves against you. I don't know if we want to let's just take a quick peek at the knockouts. I just want to take a look. I'm going to see if where the knockout levels.
Yeah, I'm looking at the knockouts right now. Unfortunately, because it is, there's a position right now, but there's a couple different knockouts ready to be kind of stopped out at the 1866 level. Unfortunately, because it's a breakout higher, it may be a little bit harder to time.
Right. So, well, I guess you got to kind of look. It does put the levels clearly on here, and there are some with a floor a little bit below and the ceiling up and up and around that 1890-ish level, which is where you were seeing the first. If this thing were to spike higher, look for it up. To potentially take it off in the 1890 level. But I'll let you take a look at the knockouts, or maybe even over in the call spreads. You can see them on the charts. People can sort through that themselves.
Yeah, I think ideally, if we see a little bit of a rise, again, we're looking for a break at that 1860 level. The 1866 knockout is going to get taken out. It'll be taken out on another one will be printed, which will be in closer proximity to where the price currently is. That could be, depending on where it prints, looking at kind of the four different knockouts that exist, that may be the one to grab if it breaks higher. As well as with call spreads, a weekly call may be the way to do it, or even a daily, but we want it to go a little bit higher, and the news is not coming today, it's coming tomorrow. So this may be a reason at dinner time today, guys, that everybody comes back, checks to see where the call spread is based on the top side. Again, tomorrow is when the news is coming out. There may not be a whole lot of volatility stacked into the one. That may be the way to play it, is root for gold today, have it go a little bit higher, take that one knockout bracket out, and then tonight, after the strikes print for tomorrow, the new dailies, that may be the opportunity to kind of a call spread or one of the knockouts, or maybe even a binary tomorrow. That doesn't have a lot of premium baked into it to go higher.
Yeah, and just so everyone knows what I'm doing here is these are the knockouts, and remember, knockouts go for the week, so they still got a couple days left. If you click on those blue lines on the left-hand side, it gives you the distinct levels where if it touches either one of these levels, you would be knocked out of the trade, whether you're buying or whether you're selling. And and again, if you know what you're getting into, if you were to buy one, exactly how much you could lose if it went against you, what you could potentially make. Everything's calculated on the order ticket for you. You would have to make the determination on which levels suit your risk profile. All right. That was a lot on gold today. Let's touch very quickly because I know the pound is the other story that we wanted to look at. So let me flip the pound up here and we can just take a look at the pound quickly.
Yeah, so they're seeing news this morning. There's a bunch of data that's coming out of the UK. again, we've seen gold, or not gold. The pound again is the kind of the mover and shaker, right? It's not as big as it was yesterday. You're seeing the euro pound down 42, pound yen 31, pound dollar up 79, and really this is a combination of analysis. So on the pound dollar, because again, I think we will get some dollar movement today. I don't know if it's going to be the strength side, but it's set up on a technical basis to see some strength, and it may just be the pound weakness that takes over. But one of the levels we talked about yesterday, and there's actually two, the 16D, and we got that basing right below, which is that telltale sign like, nope, not good. But the 18 is 36.80. Again, you can see they're having some problems. It's sitting in an area of supply. Some people, depending on how you look at this, may say, hey, look, that's a head and shoulders. This is a peak, a higher peak, and a lower peak. I'm just looking at it as being in a zone, and it's starting to form, lower lows and lower highs. So again, looking at it here, it doesn't look bad. It's in the upper reaches of the, not at the extreme, which is great. But then when I go over to the euro pound, I can see that the euro literally, when I say literally in the last 11 minutes, has not only hit, but has also started to kind of push off this 4-hour level in the euro pound. And again, euro pound, again, the pound being in the second position as this goes down, that is showing us pound strength. But now it's running into an area where versus the euro, we've stepped in the past. And again, it's the level we've talked about all week, this 88.88. So again, it's a combination of setups on this one. Again, a big push down in the overnight session, or at least in the UK session, into a 4-hour level, which will always be stronger than a 60-minute or 30-minute. And then again, bringing it back into, kind of this, the dollar story. We have it up, in an area of supply, which would be looking for over. And as far as, establishing, do I have enough room to run? I would say yes. The 1 to 3 is coming back into a level of basing. So it's not necessarily bad down here at 35.85. So a couple different ways you could play this one today.
All right, let me just jump over to the Nadex platform and take a look at that as well. This is the pound dollar. I just brought up the knockouts very quickly, and let me draw on this that level, which is I think you had 136.80 is.
Yes, that's correct.
Right, so it's right in this level. Yeah. And I'm getting there as close as I can to kind of show you where that 136 80-ish level is. So I just kind of forced it in there a little bit. So yeah, if you're looking at some resistance, looking for this to roll over, there are ways to potentially play this with a knockout going short. The other way that you would look at it, if you wanted to, you could jump over to the call spreads or even into the binaries. Let me just bring up the pound US dollar quickly. There's the pound US dollar here. I'll pull up the daily at 3 o'clock, and let's just take a look at some of the levels that we've got in there. All right, so you're right, in that 136.80, we're kind of roughly in there right now. So what could you want to do? What could you do if you wanted to if you thought this was going to roll over? There are ways to play this from the short side on the daily binaries, if you were looking to do that. I did want to mention while we're here that I did just send a chat out for the next Tuesday. Next Tuesday, we're doing our Education Summit, New Year, New You, Better Trader. So there's a link there if you wanted to click on that and register. If you haven't registered, it'll be next Tuesday, a whole day long event. Brian, is there anything else you wanted to bring up for today? Here, let me flip your screen back to you.
Inventory reports that kick in about an hour and 15 minutes. That'll be something. Again, oil didn't quite drive all the way up to the level that we talked about yesterday, but it got pretty close. So it is kind of in that range. Remember, the recommendation is get in there at 10 o'clock, see where the 30-minute levels are, see if price is driven into one of those before the news release. That tends to be kind of a little telltale sign where we're going to move. See what it is. Remember, it's missed the last two to the basically to the green side, meaning that it should have rose oil higher. Oil's already been on a drive all week. So again, that could be something, again, definitely worth looking at your charts at around 10:30 today.
Perfect.
Besides that, it's just going to be news. That's it.
Okay. With that, if you have any questions for Nadex, please email us, customerservice@nadex.com. Down at the bottom, Brian is also very accessible. You can feel free to email him. I know he enjoys interacting with you. support@keeptradingsimple.com. I also put in the chat a Trustpilot link. If you could, give us a review at Trustpilot. It would be greatly appreciated. We appreciate that. We do pay attention to all of those. And, if there's a review is great, feedback is also great. And I want to let everyone have 15 minutes before the U.S. equity markets open. And just as a reminder, we still have a backdrop of a lot of different things that can move this market beyond the stimulus. There's still uncertainty on the U.S. political landscape that has got to play out. We also have this coronavirus that's in the background that seems to be getting worse as we still try to sort through that. And not to mention, we're paying attention to economic numbers, jobless claims, unemployment numbers, which have been getting incrementally worse. So lots of things to be paying attention to. And the nice thing about Nadex markets is everything is defined risk, defined reward. With that, thank you for joining us. Brian and I will be back tomorrow morning. Good luck in the markets, everyone.